Hello, and welcome to another episode of Financial Market Insights for Traders. I'm your host, Sophia, and today we're going to explore a topic that's crucial for investors looking to build wealth and manage risk effectively: global diversification. Staying local, the comfort zone. It's natural to invest in what you know. Many investors focus on their home markets, be it the US, Europe, Asia, or elsewhere. This approach feels familiar and manageable. However, this home country bias can limit your investment potential and expose you to localized economic risks. For instance, if you're a U.S. investor heavily invested in domestic stocks, a downturn in the U.S. economy could significantly impact your portfolio. Conversely, by diversifying internationally, you can mitigate such risks and tap into growth opportunities elsewhere. Why global diversification matters. Global diversification involves spreading your investments across various countries and regions. This strategy helps balance the risks associated with any single economy. When your portfolio is too concentrated in one country, you're more vulnerable to its political shifts, economic downturns, and currency fluctuations. Consider this. During periods of global volatility, emerging markets can present strategic opportunities for discerning investors. For example, combining high-conviction public credit positions with secure private credit investments in emerging markets can offer a balanced approach. The private credit market in these regions is growing, providing unique opportunities to fill financing gaps left by international banks post-2008. Accessing international markets. Investing globally is more accessible than ever. Here are some ways to get started. Global brokerage platforms. Platforms like Interactive Brokers and Charles Schwab offer access to international markets. They provide educational content, demo accounts, and intuitive interfaces to help you start with confidence. For a beginner-friendly platform, try out a demo account at crystalballmarkets.com. International ETFs and mutual funds. Exchange-traded funds, ETFs, that track international indices are a simple way to gain exposure. For example, the MSCI World ETF or emerging market ETFs can give you broad coverage with a single purchase. Some ETFs focus on specific themes like global technology, green energy, or infrastructure, allowing you to align your investments with your interests. American Depository Receipts, ADRs. If you're outside the US, you can still buy US stocks through global trading platforms. Likewise, Americans can buy foreign stocks through ADRs, international mutual funds, or ETFs. These instruments make cross-border investing seamless without the complexities of direct foreign ownership. Research and compare opportunities. Study markets outside your region. Learn about major indices like the FTSE, UK, Nikkei, Japan, DAX, Germany, or Sensex, India. Follow macroeconomic news and track how industries are growing in other parts of the world. Analyzing stocks, a global perspective. Whether you're investing at home or abroad, understanding how to analyze stocks is crucial. Fundamental analysis focuses on a company's financial health, revenue, profit margins, debt levels, and growth potential. Look at financial statements, business models, and competitive advantages to make informed decisions. Technical analysis. This method involves studying price charts and patterns to predict future movements. It's useful for identifying short-term trends, especially in volatile global markets. Learn basic tools like moving averages, support and resistance levels, and volume analysis. Dividend investing strategy. Look for international companies with consistent dividend payouts. This strategy works well for building long-term passive income. Countries like Switzerland, Australia, and Canada are known for strong dividend-paying firms. Stock picking strategies. Consider combining multiple approaches, like value investing, buying undervalued stocks, or growth investing, targeting companies with high revenue growth. If you're stuck choosing, a deep dive into value investing versus growth investing explained articles can clarify your path. Overcoming barriers to global investing. Investing internationally comes with its challenges. Let's address some common barriers and how to overcome them. Lack of knowledge. Start by learning. Subscribe to investment podcasts, take free online courses, and follow global market news. Knowledge is the antidote to fear and confusion. Currency risk. Be aware that foreign investments carry currency exchange risk. Some ETFs and funds offer currency hedge versions to protect your returns. You can also diversify your currency exposure to mitigate fluctuations. Tax complications. Tax rules differ across countries. Research how dividends and capital gains are taxed for foreign investors and consult a tax advisor if needed. Many countries have tax treaties to avoid double taxation, but filing requirements still vary. Overwhelming options. Start small. Invest in well known global companies or broad international ETFs. Diversify over time as your confidence grows. Use screeners and watch lists to filter and monitor potential investments. Language and regulatory differences. Use English language financial news sources and translator tools to understand foreign filings. Stick to companies with good transparency, investor relations, and governance standards. Best stocks for beginner investors in 2025. Looking ahead to 2025, here are some global stock categories that beginner investors might consider. U.S. tech giants: Apple, Microsoft, Google, Alphabet. These firms continue to lead innovation in cloud computing, AI, and consumer tech. European renewable energy firms: Vestas, Siemens Gamesa. With global emphasis on clean energy, these companies are well positioned for long-term growth. Asian consumer goods: Uniqlo, fast retailing, Tata Consumer. Rising incomes and consumption trends in Asia make these companies attractive. Emerging market leaders: Mercado Libre, Latin America, Reliance Industries, India. These firms dominate in fast-growing economies with increasing digital adoption. Global healthcare and pharma: Roche, Switzerland, CSL Limited, Australia. Healthcare is a defensive sector that remains essential across markets. When choosing stocks, apply your chosen stock picking strategies and monitor their performance over time. Use fundamental and technical tools to reassess positions periodically. Final thoughts: embrace global opportunities. Investing beyond your home market isn't just a smart move, it's becoming essential. With the world more connected than ever, ignoring global opportunities is a costly mistake. By embracing international stocks, you're not just diversifying your portfolio, you're aligning with the future of global economic growth. Whether you're just learning how to analyze stocks for beginners, refining your stock picking strategies, diving into technical analysis, or exploring your ideal dividend investing strategy, going global opens up a world of opportunity. Thank you for joining me on this episode of Financial Market Insights for Traders. I'm Sophia, encouraging you to think bigger and invest smarter. Until next time, stay informed and stay diversified.